Hey, what's up, stock compounders? Brad here. So today I want to talk about how to find stocks to buy for beginners. And really, this isn't just for beginners. I mean, from beginners to experts to super investors. I mean, this is a strategy that anyone can employ if they're stock picking to do better as stock pickers. So essentially, what the strategy is we've got a handful of super investors that we've identified as investors that have been great at compounding capital over decades. Okay, so that's a big criteria. The other criteria is they have a fairly concentrated portfolio. They do big bets infrequently, which makes them easier to clone, more practical to clone than someone like Buffett or investors who basically have an index fund. They have hundreds of stocks in the portfolio. So these are very concentrated investors and have a great long-term track record. So I've highlighted which investors they are. We've got Bill Ackman of Pershing Square, Monish Pabrai, Chris Hone, TCI Fund Management, David Tepper, Lee Liu, Jeffrey Ubben, I would also add to the list. He runs a fund called Value Act Capital. He didn't have any recent buys in Q2, so I don't have any stocks from him on this list, but definitely check on what he's done in the last quarter moving forward. So here's how I would go about it. If I were just getting started in investing and I wanted to pick stocks, I wanted to buy individual stocks rather than buying something like an index fund. So the first thing I would do is I would say, okay, what are the best investors in the world buying? What have they bought recently? Okay, so let's just take a look. Let's go to Dataroma, which aggregates all this activity from super investors. So we're going to go to Dataroma. We're going to look for Bill Ackman. Bill Ackman, Pershing Square. Let's click on that. So we can see right here, this is pulled from 13F filings, and it's in a format that's very easy to use. 13F filings aren't the easiest things to work with. Nice thing about this format is we can see on one page, what positions he added to, if he reduced any, if he sold any, or if there was no change in the position. So you can see recent activity. That's activity in the second quarter of 2020, which is April 1st through June, right? April, May, June, through June, however many days June has. June 30th, it says right here. So that's the second 3-month period in 2020. So you can see lows, he added a little bit. That wasn't enough to put that one on the list. But a little bit of lows, quite a bit of Restaurant Brands International, 67% he added to that position in the second quarter. So what we're doing here, we're saying, okay, well, let's take a look at Restaurant Brands International. Could still be at a compelling price because Bill Ackman bought it somewhat recently. So you can see here I added Restaurant Brands International as a second quarter buy. It makes up 18% of the portfolio, which you can see here. Now the low price, this is a very important column. You're going to look for the low price in the second quarter between April 1st and June 30th. In this case, Restaurant Brands International got down to $33.27. I think it was like on the 3rd of April. So what we're going to do for our purposes here is assume that that's the price Bill Ackman bought more of QSR, Restaurant Brands International. So this is kind of our target buy price, okay? This low price for the quarter. Because we know that was a compelling price for Bill Ackman. He was loading up at that price, adding 67% to his position. Currently, it's at 55.90. That's of what is today, September 20th. So it's gone up 68% from the second quarter low. That's quite a jump from the second quarter low. You can see here, so this VIC column is Value Investors Club. Now this is a great resource to understand a business better. These are write-ups that are done on specific companies. In this case, these are all long write-ups where the investor who wrote these thinks the company is going to do well moving forward. The stock price is going to go up to reflect that it's a good investment. So you can see there was a write-up from November 2017 at $63 per share. That was the price in November of 2017. So you can see it's actually gone down a little since then. And you don't just want to go on price. You want to make sure the market cap reflects that price change, because some of these price changes could be a result of stock splits or other kind of financial engineering that may not be reflecting the true change over time. Okay, so you want to just check that, check the market cap. It's given in the Value Investors Club write-up, so note the market cap, and then note the market cap today, and just make sure the price and market cap have changed kind of in alignment. Otherwise, it might be something else that's going on there. So Value Investors Club, a fantastic resource to get to know these businesses better, to help you decide if you actually want to own it. Stocks, they're really not just, prices moving around on a screen. A stock is a partial ownership in a business. And, one of the original value investors, Benjamin Graham, that was one of his biggest teachings. You have to look at stocks as a partial ownership in a business. You're a business owner, okay? And if you think about it that way, you're going to adopt more of a long-term kind of perspective on it, which is a huge advantage for investors when you use that time element to your advantage rather than playing the short-term pricing game, because price can really go anywhere in the short term. Mr. Market is manic depressive, right? It's very, very emotional, very emotionally driven in the short term. Stock prices are, but over time, over a long enough time, 3, 5, 10 years, Mr. Market does a good job of getting the price right, which means aligning the price with what the business is actually worth, with what a partial ownership share in that business is actually worth. So great resource to find out more about the business, to wrap your head around the business. These next columns, operating income and enterprise value. That's what EV is, not electric vehicle. That might have excited some of you, like, oh, is he going to talk about electric vehicles? I am not going to talk about electric vehicles. Enterprise value. So why did I put these two columns in? So operating income, this is the trailing 12 months of operating income. It's what the operating aspect of the business has earned in the last 12 months. And I think it's important to focus on the operating aspect of the business. Well, you see this video, how it froze here, guys? I'm on a MacBook right now. Apple has just been on a tear. Now, this screen froze. I would sell your Apple shares. I'm not so bullish on Apple. This is a technological glitch. So we're just going to remove that for now and keep on going. Operating income. So what has the business generated in terms of earnings from the bread and butter components of the business, the operating aspect of the business? That's right here. These are in millions of dollars. Enterprise value is, what would it cost me to buy the whole business today? So it's not just market cap. It's not just buying all of the shareholders out. Okay, it's not just equity. It's also the debt. What would I have to pay off all of the debt holders? It's also minority interest holders. Stock options are in there. Of course, you have to factor in cash. If the company has a lot of cash, it's going to drive down the enterprise value because you can use that cash to pay off some of the equity and some of the debt. So enterprise value is just, it's a way to think about what would it cost to buy the whole business. So you've got what has the business earned in the last year compared to what would it cost me to buy the whole business. And that gives me earnings yield, okay? This is a really important number to get a sense for how cheap the business is. How is the price kind of aligned with value, okay? So, 6%, it's hard for me to get too excited about 6%. This is negative. So Seritage Growth Properties is one that Monish Pabrai put about $40 million into in May of 2020. This, you can't really analyze this one with kind of these more basic metrics, operating income versus enterprise value. It's more of a kind of a long-term real estate redevelopment play. So you really have to understand the business for this one. But you can see here, Visa is number 3 on the list. 3.3% earnings yield, that doesn't get me very excited. None of these numbers really get me excited. 2.5, 4.2, 3.7. This number gets me excited. I'll tell you that right now. Alibaba, David Tepper bought in the second quarter. Now you can see the price has gone up quite a bit since he bought in the second quarter. But I'll tell you what, guys, this is still a pretty impressive earnings yield. Now don't take these numbers at face value. These are very kind of back of the napkin calculations that I'm just kind of quickly pulling some numbers for you guys to get a sense for what I'm seeing here, what I'm looking for. But that is a very impressive earnings yield for Alibaba. So that's it, guys. This is what I would do if I was starting out and I wanted to learn how to pick stocks and invest in individual companies. Figure out what the best investors in the world have bought recently. Is it a high conviction bet? What percentage of the portfolio is it? What was the low price in the quarter that they bought? And maybe that's your target price. Maybe you just wait until it gets back down to this low price, because that's going to give you likely a margin of safety, because they probably bought a little bit higher than that. None of these super investors are nailing the exact low price from that 3-month quarter. But we can be greedy. Why not? Let's pick this as our target buy price. And then we get to understand the business by reading these Value Investors Club write-ups. And it's good to understand what has the business done, the operating aspect of the business in the last 12 months versus what it would cost to buy the whole business today. And that's what these numbers are all about. So I hope this helps, guys. Let me know if you have any questions about it. I can totally geek out on this stuff for days, so happy to answer any questions. But if you're a beginner in the stock market, you guys, this is called bowling with bumpers. Don't try to pick investments on your own, okay? Use this as a starting list, and you will be far and away ahead of your peers who are, just trying to do their own research from scratch. This is a fantastic way to jump ahead. So that's all I got, guys. Let me know again if you have any questions, and I will see you in the next video. Take care.